Mutual funds are when a bunch of investors that follow the same investing philosophies pool their money together and give it to professionals to invest. Mutual funds are invested in securities such as stocks, bonds, and real estate. This is also known as the portfolio. Each investor in the group has to share the income, expenses, and gains or losses in the fund. And this all depends on the amount of securities you hold. Each investor owns shares, and this also represents how much of that fund belongs to that investor. The entire mutual fund is managed by a team of professionals who buy and sell securities that are beneficial for the fund. You can invest in equity and debt securities, derivatives, and underlying funds. Now let me explain to you what each of these mean. Equity securities are investments that represent ownership. In other words, it's a share of a company. Debt securities are when you are the lender. An example would be bonds. These securities are government and corporate issued. A derivative is essentially a contract, and its price is determined by the price of another investment. And finally, underlying funds are when mutual funds invest in the securities of other funds. The first way to make money is when the fund gets dividends on stocks and interest on bonds. The second way is when the securities of the fund increase in price, so capital gain. The third way to make money is if your fund increases in price and is not sold by a portfolio manager, and then you can sell your fund shares for a profit. Mutual funds are great for the professional management that they come with. Investors can purchase funds of their choice and have professionals analyze and keep you reported on your investments. The problem is the cost is so high. You would have to pay for the fund's management expenses, and then there would be commission fees and hidden fees, and then you would have to pay for the transaction cost for buying and selling shares for your fund. Mutual funds have a few advantages, such as their professional management, but there are way too many fees that can hit you. If you know what you are doing and are a confident investor, then don't bother wasting your time with mutual funds. So thank you and goodbye.